All right, okay, good afternoon. Quick check. Can you guys hear me as well as see my screen? And I think the video should be working. Okay, good. Okay, so yep, okay, so if everything is fine, we'll get started for today's session over here. Okay, so yeah, today's session here will be a little bit more directed towards market outlook. Okay, to share with you what are some of the things to keep an eye on for the last quarter of 2023 and progressing into next year. Okay, so instead of the usual kind of educational materials, I'll be sharing with you more directly into the market itself. Okay. But of course, before we jump into that, some housekeeping over here. If you have yet to log into your MQ account, okay, make sure you do that. Because later on, if you want to actually claim the points, you need to also be logged in. Okay. So just a very quick reminder. Okay, you can click on the login or sign up button, and then of course, if you already have an account, okay, fill in your particulars and then click login. And then you'll be able to then chat with us in the chat box later on as well. Okay, so if you have not done this, take a couple of minutes to do it. As we are going through the housekeeping, just make sure you quickly do this. Okay. And of course, just like I mentioned, if today you are joining in today's webinar, you can claim 300 MQ points, but of course you need to check in, right? So what you need to do is basically take a screenshot, okay, of this particular webinar. And then after that, once you have this webinar is completed, you actually get a quiz, and you basically need to answer the quiz, upload your screenshot together with it, and you'll be able to claim 300 MQ points. Okay. Now, if you have not registered to get the post webinar updates, there's this QR code here that you are seeing on the screen right now. You can take a couple of minutes again, very, very quickly, scan it, register, so that after this webinar, you get the updates. And then from there on, that's where you can actually complete the quiz, submit the screenshot. Okay. And from there, you actually get 300 MQ points. Okay. So that's another one. And last but not least, we'll be having a mysterious gift by the end of this webinar as well. So you definitely want to pay very, very attentive to the things that I'm going to be covering today. Because of course the questions are going to be related back, okay, to what we've covered so far, including the post-webinar quiz, those questions are going to tie back to what we have touched on in today's session. Okay, so make sure you stay attentive, be present, okay, and take notes, right, if you need to. All right, so with that said, let's go on to the last two slides. Okay, and of course today I'll be using the VC Plus platform to share with you the market outlook as well. So later on, I'll just very quickly give you a quick teaser, right? So let me go back to the dashboard. Okay, so what you see over here is basically the VC Plus platform. Okay, if you are very new to it, you can actually go over to the website to register for a free account. The website is www.vc-plus.com. Register for a free account, explore the platform itself. There are quite a bit of tools that I can actually use to help you in your analysis process. Throughout today's webinar, we'll be using that to also share with you the analysis process. Okay. So again, if you like to stay updated, very quickly, that is the QR code over here on the right. Okay, you can actually scan it, and then once it direct you to the platform, just PM and say "add me," so that in the future, if there's any information or updates, you'll also be receiving that directly. All right. Okay. So with that said, let me go back to the platform over here. Okay. Now, Q4 this year transiting into next year is going to be a very interesting period, right? Because if you've been following through the market, you would have also been known that late last year and this year, the primary focus that the market has is inflation. Okay, and a lot of central banks are essentially using their tools, the monetary policy, to kind of tackle the high interest rate environment, the high inflation environment by raising rates, right? But going forward, okay, as inflation is coming down, the next concern would start to pivot, okay, from everyone thinking about, well, high inflation, how are we going to address that? Now inflation has started to drop. The next primary focus will start to pivot, will start to shift. So from this year going into next year, the conversation will start to tilt towards a little bit more like, how the economy is going to be doing. Okay. And naturally, that's actually a cycle in the market, right? We would have, high inflationary environment. And then after that, we'll have the concern over recession. And then after a recession kicks in, when the central bank do certain things to tackle recession, then naturally we'll go back into, higher inflation pressure. And then it's always a cycle. It always repeats itself. Okay. So this year, last quarter going into next year, that's where the transition is likely going to take place. From a high interest rate environment, the banks are likely going to start pivoting, okay, from raising rates to maybe stopping it. And then eventually they'll talk about cutting rates because recession will then kick in. Okay. Now, at this kind of juncture is where, from a fundamental point of view, the FX market are going to give you some decent opportunities because not all central banks are going to do the same thing together. Okay, some banks are going to start cutting first, some banks are going to still be raising, some banks are going to maintain a relatively high interest rate. Okay, so what your role to do right now is to start finding out, okay, which central bank, at least from a fundamental perspective, right, which central bank would have what we call a fundamental deviation. Okay, deviation basically means two banks are doing basically quite the different things, right? Now, throughout this year, we see a lot of banks actually basically doing the same thing. They're all hiking rates, except for one, right? Bank of Japan. Okay. But as I mentioned, as we are transiting towards next year, some of these banks may start to do slightly different things, right? We may have banks maintaining rates, we may banks cutting rates. We may have still some banks, doing rate hike. Okay. So from a fundamental point of view, when you are able to identify in the early stage, one bank is cutting, one bank is not, that's what we call deviation. Okay. And when that happens from a fundamental perspective, that would give you a very clear sense of direction to focus on that particular currency pair. Okay. So I'll give you the framework over here, and of course I'll highlight some of the key opportunities to keep an eye on from a shorter term towards the mid-term perspective, right, from quarter to quarter basis, right? So that's from a fundamental FX perspective. Okay. Now, of course, globally there are a lot of things developing as well. If you're keeping track, we have the recent news, okay, about potential war. Of course, gold, if you've been tracking it, it has skyrocketed quite a bit. Okay, and then of course we have not as serious in terms of like a war, but we also have news related to Bank of Japan intervention. Okay, and the question as to should they really intervene, or when are they going to intervene, how aggressive are they going to intervene. The reason is, again, the yen has actually weakened significantly across majority of the currencies, and in particularly the dollar yen. Now, this is not going to be beneficial to the Japanese current economy because they are very reliant on export and import. Okay, if today you have a weak currency and if you start to import stuff in, everything becomes very expensive. Okay, so we have this term called imported inflation, right? Because your currency is weak, when you buy stuff in, it's naturally very expensive, and because it's coming in very expensive, everything locally becomes expensive, right? And it's not surprising why the yen is weakening, because most of the major banks are hiking, but Bank of Japan is not really doing anything. Okay, so this opens up a possibility about what would happen going forward for the remaining part of this year and next year. Okay, is the intervention going to happen? Are we going to see a major deviation, which means that if in the future, right, next year, most banks starts to stop hiking or even consider cutting, would the Bank of Japan actually do something very, very different? Okay, because they have yet to really increase their rate, right? They need to actually do certain things to strengthen the yen, or else if it continues to depreciate, it's not going to be helpful. Okay? So these are some of the macro fundamental perspective that we're keeping very, very close watch. Okay, of course, a war outbreak can affect global markets as well. Okay, and then of course, if you're not familiar with what's developing from a economic point of view in terms of some alliances, you may heard of this term before called the BRICS. Okay, which is essentially a group of conglomerate different countries coming together to start pivoting away from the reliance of US dollar. Right, so there are quite a bit of all these things happening, and of course the conversation about is the US dollar still going to be the global reserve currency, right? I'm not sure how many of you actually had this conversation before, but I think like back in 2017, 5 years ago, 6 years ago, the conversation about the dollar losing its significance has already started. Just that back then, timing wise, I don't think that was going to happen anytime soon. But since then until today, we've seen a lot of progress from a global perspective. People are starting to pivot away from the dollar. Okay, so BRICS, which I mentioned just now, is one of it. Okay, now there's this term called petrodollar, which is where when global trade is happening, revolving around petroleum, revolving around some natural resources, the US dollar is the main currency that people use to trade with. Okay, but right now with BRICS development, one of their objectives is to actually pivot away from using the dollar, right? Which means that they can do an internal collaboration where they say, okay, if you want petrol, I have something else, let's trade. Okay, or we can buy and sell within our own individual currencies, and then from there on, you use that currencies to trade again and things like that, right? Which is basically the whole idea of pivoting away from the reliance of dollar. So as that starts to roll, we'll start to see less and less dominance on the USD. Okay, which means that the dollar may start to lose its power. Now, obviously, the US wouldn't want that, right? Obviously, the US wants to maintain control of it, so they are aware of it. Okay, the thing that we're going to continue to monitor is, as this continues to develop, what will the US do? Okay, so global macro perspective, I think there are a couple of things that you definitely want to be aware, and you definitely want to be, keeping a close watch. Okay, because a shift on that would opens up huge opportunity for us. Okay. So do take note, right, on some of this macro perspective as a backdrop whenever you trade the market. Okay, you may not trade it in a long-term perspective, but at least understand that some of these things are developing, so that when you jump into the market and you analyze and trade it on a week-to-week basis, or even bi-weekly or monthly, you at least know what's happening, and you have that conviction and that understanding of what's likely going to happen. All right. So very quickly, right? Let me jump over to, of course, the euro dollar first, which is one of the most common currency pairs. Now, this week there isn't much. Okay, so I'm going to share with you from a weekly perspective in terms of outlook, as well as longer term opportunities, right? Which is basically on the quarterly basis. So you can see it from a perspective of kind of like a swing trade approach towards potentially some of the what we call investment ideas, right? Because if you're looking at quarterly or even going into next year, it's a little bit more towards investment. Okay. Now, when we look at the chart, okay, or I would say when we analyze the market and eventually decide what to trade, recently I break it down into a very, very simple framework. Okay. So I'm going to put this here, right? Very, very simple framework. This framework, again, doesn't mean that you need to naturally just follow my strategy, but this framework that I kind of put together really give you an idea of whenever you take a trade or you take an investment or you make an investment, right? What is the most significant component? Okay. Now, I mean, if you've been trading some time, you probably know that the first thing here is direction. Okay. Getting the direction right is very important. Okay. I mean, if you get it wrong, then it's very, very hard for you to make money, right? You want to get the direction correct. That's the first thing. Okay. And what I realized is a lot of times traders would focus primarily on direction. Like they would say, okay, should I buy or should I sell? Okay. And a lot of times, a lot of strategies revolve around just determining the direction, which is great, right? But to me, I think that's not important, right? Not, I wouldn't say not important. That's not the only thing that's important. Because today, if you can get the direction right, but you may also encounter some trades where, hey, you bought, it did not go up, end up in a cut loss, and then the trade eventually move in the direction that you want. Okay, so you may see it from a perspective that, hey, I get the direction right, but I still lose money. Okay, so something is missing, right? So that's the part where direction itself is important, but it's not the only thing. Okay, and that's where the next thing that you need to do is to identify the timing. Right, so I have this framework where I kind of put a arrow down. Okay, and kind of have like first thing is to determine the direction, and then once you've done that, great. You still need to decide on like what is the optimum time to get involved in it. Okay, is it now? Is it tomorrow? Was it like last week where you passed? You missed the opportunity, so you shouldn't be chasing it. Timing is important. Okay, now just give you some case study, right? That recently just happened like yesterday and today. If you've been following cryptocurrencies, Bitcoin in particular, right? Yesterday we have a sudden huge spike. Okay, now you may be thinking, oh, then we should be buying it, right? Because we have a huge spike to the upside, right? Direction is clear. I mean, there's no reason why you should be selling it when it's going up, right? But if you look at timing perspective, is now still a good time to buy it? Probably not. Okay, you probably have missed out that move, right? So when is the better time to get involved in a trade if you want to look at Bitcoin in particular, or even gold, right? Gold has moved up significantly over the last weekend. Is it a good time to buy gold now, right? Probably not, right? The better time to buy gold was like last week. Okay, you should have got in before that push up. So timing is also very important. Okay, because if you get in at a trade on the wrong timing, you actually would suffer losses or even not make money eventually as well. Okay, so once you have a direction, the next thing is timing now. So is there something else, right? And I throughout kind of compile all my experience in trading, I started to realize that, hey, there's actually one thing else that traders would need. Okay, because if today you have your direction, you have the timing, sometimes you will observe, hey, how come I enter a trade, it makes money, great, right? So you have the direction right, you have the timing correct, but after that the market doesn't move much. Okay, you just move a little bit and then that's it. You make a little bit tiny of profit and then it starts to reverse. Then end up maybe you manage it and then you get out with tiny profits or even just break even. Right. So what was the last component that would be able to help me understand how I should manage the trade? Should I be really looking at things and like this? And that's where I came up with the last component on this framework, right? It's called price or context. Okay. And basically that is where, after you decided your direction, you decided, okay, timing wise is okay. We then need to consider the third component, which is our price and context, right? Now, context is a very, very difficult thing to kind of like determine. Okay, it comes with a little bit of what we call experience. Right. So I actually changed the word from context to price, actually, right? Price is a little bit easier for everyone to understand because price is essentially asking yourself this question: at the current price point, is it worth taking a trade, right? If it's not, then where would be a better, more rewarding price for me to kind of execute a trade? Okay. So it's not, you don't want to see them independently, but they are kind of interconnected. Okay. The direction would determine up or down, right? It gives you a sense of should I buy or should I sell? The timing will give you the element of, okay, now I've decided I want to focus on the buy. Is this the best time to get in? If not, then let's wait. Okay. And of course, there's details onto that, right? Like what are you waiting for and things like that. Okay. And once these two are done, you then ask yourself the question: is it worth taking? Okay. If at the current price point it's not worth taking, maybe I need to be patient. I need to wait for the next setup and things like this. Okay. And oftentimes, price and context can determine direction as well. Okay. So this two arrow here is kind of like one up, one down, right? Why I say that is because if I give you a simple understanding, okay, if today the price is approaching support, okay, naturally your thought process is I wouldn't want to be selling into a support, right? I would rather be looking at, can I get a buy around the support zone? If you flip it, if today price is approaching resistance, then naturally you also be thinking, right? I wouldn't want to buy into resistance. I would be looking more towards, hey, can I look for a sell opportunity around the resistance zone? Okay, so where price is in terms of the context will also give you some guidance in terms of the direction. Okay, so this is the framework that we'll be using. I kind of like put this framework together quite recently and kind of figured that this would give clarity to a lot of traders. Okay, so there are many strategies that will give you answer towards determining direction, determining the timing, what is your setup, determining the context of things. There are many ways to achieve that. Okay, but at least with this framework of a triangle, it gives you that clarity of what you need to actually aim for. Okay, what are some of the questions you need to answer? Okay, now to put things into context, to put things into practical example, right? I'll talk a lot about the. So I'll actually skip the euro dollar because to be honest, I'm not looking at this this week. We'll look at. I'll talk about WTI crude oil, right? Because crude oil is naturally one of the opportunities, at least from a shorter term perspective, things that I'm looking at. Okay, so okay, this is on a forward chart. Okay, so we talk about the framework, right? Direction, timing, and price or context. Okay, so we always start off with understanding direction first. Okay, now as I mentioned, there are many ways to determine what direction you want to be focusing on, but for me, I use a very simple pattern. Okay, today, if I can see a strong momentum push, following that, I see kind of a corrective move. That's a key direction that I can focus from a technical point of view. Okay, bear in mind, you can also use fundamental to complement it. But today, when I look at a chart, I focus on the chart. Okay, once I've done everything, then I only combine it with my fundamental and macro perspective. So from a technical perspective, I'm looking at patterns. Okay, so what you see over here is we have a fast drop, we have a corrective pullback. This determines a direction for me, which is down. So when I look at this chart here, right, I have a clear sense of direction. Okay, so that's tick, right? Imagine the checklist. I'm done. Direction, good. But then now I know, okay, I want to focus on the sell. is this the best time to get involved in a sell? Okay, so you need to then have the framework to help you answer, do I have the setup to execute a trade? Okay, so you need to be very clear, right? I always say, as traders, you need to know what you want. You need to be clear what you want to see from the market before you pull the trigger, right? So that's what we call a setup. If the market doesn't give you what you want, you wait. You don't move. You wait until it gives you what you want, then you execute on it. Okay. So my setup is very, very straightforward. I have many, I would say 3 to 4 setups that I use to execute a trade. Okay. Now, one of the setup over here that I'm looking at is a simple 3-wave move. Okay, so let me clean this up a little bit. The only thing you probably need to focus is somewhere around that 100%. Okay, which is there. Okay, so we can't have that hit, right? You can see that. Okay, so what is that 100%? Is essentially measuring this move. Okay, and then you take that move, map it over here. 1:1, equal leg. Okay, and the opportunity to get involved in that trade is basically there. Okay, so that's the timing, right? So we kind of have the direction. The timing is I want to see a setup, and this setup that I'm talking about needs to give us a 3-wave move. 1, 2, 3, and it needs to be somewhere around that fake zone. Okay, so that's the first setup. Okay, now if today, let's say we are talking about this and we kind of missed that, right? Let's say you did not enter at that tip, then what would happen is you need to also have, alternative setup that in the event that, okay, if you miss this, can I still have another opportunity to get involved in? Okay, now the next setup that we'll be looking at is more of a breakout technique. Okay, so this is more of a pending limit order. We're waiting for price to hit that level and then we just get involved, right? Now, a breakout technique is quite simple. I also want to see this pattern. Okay, but instead of entering here, we'll be entering at the breakout. Okay, so we wait for price to come down, and if it breaks this minor low, we get involved in the sell. Okay, so the pattern looks the same, but we're basically using a different technique to get in, right? So that's the element of timing as well, right? Setup. Okay, now over here, if I put in a little bit of a drawing, okay, so based on this time frame, I would have an entry set up here. If I'm using this same time frame for a breakout, my entry will be then again here, right? So I have one chance here and then one chance here. Okay, but of course, okay, for some of you who are a bit more experienced, okay, we can use this thing called multi-time frame, right? Because if today I'm gonna stick to this time frame, I'm gonna look for the breakout here. I'm giving a lot of potential profit. Okay, so what I would do is sometimes, go down to a lower time frame, and same thing, I want to look for this pattern, but I can look for this pattern on a smaller scale. Okay, I can look for this pattern maybe on the hourly. If I see something like that, I can still pull the trigger on the hourly time frame for the breakout. So far, so good, huh? Okay, so this is what I mean by timing, waiting for the setup to come to you, pull the trigger. Now, how do I apply context in this particular example? Okay, so I want to look at, where did price come from? And I want to always ask myself this question: is the risk reward ratio worthwhile, right? So I zoom out, right? So from a zoom out perspective, I realized that, oh, okay, the crude oil price has actually came from all the way at the bottom, rally, 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 and then at one point it hit this top. We kind of see a nice little reaction down. And if I'm gonna get involved in a sell trade from here, I do have quite a decent downside that I can capitalize on, right? So I have, at least this area here that I'll probably need to take note. If that area breaks, it can actually bring me down to maybe this level or even potentially lower here. Okay, so of course, depending on your horizon, okay, to me, I think if today we can get a trade from somewhere there coming down to this area, perfect. I don't need too many. Okay, if I can catch a trade here and target here, I think that's good enough. Okay, so that's a little bit on the context perspective, right? If today my targets can only, that means if my profit potential is only here, then I will need to reassess that situation. Okay, is it really worthwhile? Okay, so that's what we mean by context. The end goal of context is to ask yourself, is it worth trading? Is the profit potential really that rewarding? Is it worth the risk? Similar sort of questions will guide you in understanding the context. Okay, now a little bit on Elliott wave as well. Elliott wave has this principle where prices tends to move in tree. Okay, I mean, you can start to observe a little bit here, right? 1, 2, 3. Okay, so if today the market came down, broke that low, okay, so we kind of have also this 1, 2, 3, and then it forms a flag here. Okay, so you will start to see, right? The direction wise is what? We have this pattern, the direction is still down. Clear. Okay, direction is clear. Maybe we have timing as well. Okay, we have this setup. But then I start to see in context perspective, we already have 1, 2, 3. The downside here may not be very rewarding because I know that whenever the market gives me a 3 move, there's a high possibility it will give us a deeper pullback first. That's usually what the market would do, right? So if I'm going to take a sell here, maybe this will come down a little bit, and then after that it starts to bounce. So this may not be worthwhile. Okay, so context comes with a little bit of, as I mentioned, experience as well. Comes with whatever method that you're applying. It probably can give you some guidance, right? But the thing is, you always need to assess these 3 components when you are taking a trade. Okay, so let me put everything together on crude oil. Okay, so crude oil over here, if we're going to look at it, there are 2 primary targets that we can aim for. Okay, one will be okay, the 100% marks quite nicely around that zone as well. Okay, one area of crude oil for target to look out for is somewhere around $78.30. Okay, and then the next target is somewhere around $74, or you can put it around $73.80. Okay, so this gives us a pretty decent downside opportunity. Okay, now just now what I've done is I've put in this channel here, right? So very nice little tree move. From Elliott wave perspective, we usually put in a WXY. Okay, can see something like that, right? So we're expecting downside. Okay, the thing here, as I mentioned, if you miss that, no worries. Go to a lower time frame. Okay, and be very clear what you want to see, right? So I know, okay, on the hourly, my direction is determined. My timing on a H4 on the higher time frame is more or less completed. We have context, we have huge downside opportunity. Okay, so what I'm looking out for over here, okay, on the lower time frame, is very simply, can I get a, I'll remove this channel. Oh, sorry. I'll change the channel to remove the background. So that becomes a bit cleaner, right? So what I need to see here is basically, can I get a setup that I want? Okay, and just like I mentioned, right, one of the entry setup is we get a push down. If I can see a 3-wave move, okay, on the hourly, I can then use a breakout on the hourly, or of course, I can even capitalize on this on the hourly. Okay, now there are many ways to get involved in the trade depending on the style and how aggressive you want to be as well, right? Playing with multi-time frame is the same thing. Okay, so with all that said, okay, I can also include a little bit of a fibs. Usually the reaction point that we're looking at is the 50% mark. Okay, or I would say 50 to 618, right? That is usually a zone. Okay, so what we are interested in is for this to pull back in 3-wave. Okay, and then we'll look for the sell. Okay, so this sell here, you can above that recent high on the hourly time frame perspective. This is going to be all the way down, or you wait for that 3-wave. Depending on how that 3-wave is going to develop, you can look for a breakout trade. Okay, if you're going to look for a breakout trade, your stop loss doesn't need to be all the way at the high. You just need to be at the minor low. Okay, so I always say the minor high. Okay, so potentially you have 2 kinds of setup over here that you can look into, right, on the hourly time frame perspective. Okay, that's the breakout. Now, with the target, right, let me go back to the higher time frame on the H4. We have determined our target, right? So our primary target can go all the way down here. and you can take a look at the risk reward ratio. Okay, this breakout trade is 5.6. The pending order, okay, the pending order is around 6.18, which I just round down a little bit, 6%, right? So is it worthwhile, right? Based on context perspective, is the profit potential there? Is everything alignment from lower time frame to a higher time frame? Yes, right. So that's where you can see that framework going into practice. Okay, and naturally, crude oil is just one of the opportunity I'm really keeping close watch. Now, this kind of setup here is what I call a shorter term swing trade, right? It's not something where you're gonna hold it for maybe 1 quarter. Okay, this move in expectation maybe take you like 1 month or maybe just slightly over that. Okay, but it's not gonna be a trade where you're gonna hold for like months. Okay, you probably hold it over like maybe 2 weeks to a month. Okay, depending on how the setup is gonna take off. So crude oil is one of the opportunity to definitely pay close attention to. Okay. Sadly, Bitcoin took off very fast already, so that is not something you probably still want to keep, hopping on. Gold here is presenting something as well. XAU USD. Now, I'll talk a little bit about the other setup that I personally look into as well. Okay. Now, we managed to catch the gold trade as well. I think some of you who managed to be familiar with this pattern would be able to catch it as well. I did not catch the entire move, but at least I caught half of it, right? Now, this is another setup that I used to trade. Okay, so just like I mentioned, we have the flag. Okay, basically the equal leg we look to enter, and then the other setup is a breakout. Then the third setup I often use is basically this, right? We can't get a push down, and then we see a what we call a crawl. Basically, the market loses momentum. Now, whenever I see this, I know there's a good chance of a reversal, and the setup that I'm gonna use to trade is basically a breakout. Okay, we use a certain minor high. Our stop loss will be a previous low, and then once we break, that's where we're gonna get involved in that trade. Okay, so it's not complex, but you just need to be familiar with the pattern. Okay, so now go here after this entire move. What are we looking out for? Okay, so we need to build a case again, right? So what's the direction now? Obviously, it's up, right? Because the momentum is there. We have a clear sense of direction. Is this the time to buy? Okay, you can see that framework being applied. Huh? The answer is no. Why? Because if today I want to buy, what is the setup I need? I need to at least get, some kind of a pullback. Okay, so I need my setup to come to me. If I want to buy, I need this at least 3-wave pullback. Okay, do we have that? No, we only have minimum maybe one. That's it. Okay, so not the best time to get in yet. So you can see that framework tell us, okay, we have a clear sense of direction, but now may not be the best time, right? Because why? We understand that there's a good chance the market will continue to do a pullback. And if you buy in now, you need to hold through this period, which is not going to be easy. So you wait. Okay, we can use a couple of things to help us a little bit. We can use a bit of fibs here. Okay, looking around that 50 and 618 often is the key zone. Okay, so we can also wait out for a little bit more in terms of how the market is going to develop. It may take some time to develop the correction. Okay, but ideally we want this to come down slow. Okay, and then we have a key area to look up for. Okay, so gold is not potentially a trade this week, but from a quarterly basis going into like next year, I think gold has a lot of upside, right? Because we talk about how the dollar would start to lose its dominance, right? And in the longer term perspective, the valuation of dollar may continue to slide. Okay, and what asset is right now the best asset to protect the depreciation of certain asset will be gold, right? Because gold is a safe haven right now. It's still perceived as that. And then if you start to look at like larger time frame perspective, okay, we have this pattern here that suggests on the longer time frame upside as well, right? Because we have this here, okay, giving us some kind of a correction. Okay, the market actually bounced off a pretty significant area here as well. Okay, so from again, context perspective, right? It's telling us, okay, there's actually quite a bit of upside, because if I'm just going to look at where the previous high is, I think the profit potential is pretty interesting to watch, especially if we can get a nice little break off this entire structure, right? That would be great. Okay, so that's on a high time frame, and then on a 4 hour time frame, we're looking at that. We're basically waiting for the pullback, waiting for the better time to get involved in the trade, right? So gold is one that you want to pay close attention to. Okay, yeah. So I'm going to cover a couple of things that you definitely want to have it in your watch list. Another one in terms of FX perspective is dollar yen. Okay, now dollar yen short term, we may still see a little bit more upside. I mean, if you go to the daily time frame, there's no reason to be selling now. Okay, it's moving higher, right? It's in an uptrend. There's no reason to sell. The direction is up. Okay, so then the question some people ask, hey, is it good to be buying it? Now, my personal take is I would not be too keen to buy the dollar yen. Why? Because from context perspective, right? The context, the price point gives me another, feedback to me that okay, maybe the direction I will want to look for another direction. So now why? Okay, because if today you scroll out a little bit on the daily perspective, right, we kind of see that this key zone is pretty significant, around 150 to 152. That's where you can see in the past it came up and then instantly it got rejected very strongly. Now, I'm not saying that it's definitely going to get rejected, but just now I briefly described about macro environment, fundamental environment, right? So what are some of the potential fundamental catalysts that can push the dollar yen down is one, the Fed may start to talk about cutting rates. Okay, or I would say pivot first, right? From hiking to not hiking anymore, and then eventually they will cut rates. That's what the overall direction the Fed is moving towards. And then on the yen side, which is Bank of Japan, we see another thing, right? Bank of Japan is now concerned over weakening of yen, okay, which they may need to do something to push the yen back up, right? So that's where we talk about the divergence, right? The deviation among the central banks. And if that's going to happen, then obviously that's going to open up a nice little U-turn for dollar yen. So the context here you can see, right? The application of it is, yes, it's up, but instead of can I get a sell? Because I think the sell will give me more interesting opportunity. Okay. So from this perspective, I'm no longer interested in buying the yen at where we are right now. Okay. I'd be more interested in, can I get a sell? So if today I want to get a sell, right? What are the things that I need to look out for? What is the setup to allow me to execute a sell trade, right? So again, in a group, okay, you have a sense of direction, you want to focus, you still need to wait for the setup. So for me to sell, there are only two setups I'm really interested in. One is if I see a crawl. Okay, let me increase this. If I see a crawl around this zone, which is already identified right on the higher time frame, then I can use a breakout sell. Fantastic. Okay. If today I don't get a crawl, okay, but what I want then is a push up, okay, and a nice little rejection, and then a correction here, right? So I either wait for a crawl setup to come to me, or I wait for this. Okay, this one I think you guys are familiar. Just now we mentioned quite a bit. Right? So dollar yen here is not a trade this week, but again, it's probably something that we're gonna build up within this quarter, right? As we approach towards the end of the year, this is definitely one of the bigger trades to look out for it. Okay, now let me go back to the daily to just show you. If today we're looking at a sell, okay, on dollar yen, what are just some key levels to look out for? Okay, I think to be very very conservative, this would naturally be one area, which is great. I mean, if you can look at a potential sell around 150, this zone is around 144.7, right? So it's almost a 500 pips move. Now, if that breaks, the next level will naturally be here, right? So if I'm just gonna take like fips from the low all the way to that peak, 50% mark is here, right? You can see. So it's a nice little confluence. Again, the market is not gonna go one direction all the time. It's probably gonna do this, does a little bit of a pullback reaction, and then after that drop again, that would be ideal. Okay, so we're looking at a potential trade here. If we miss that, if I don't know, after today mentioning to you, probably don't want to miss it. You want to probably try and catch a sell trade there if it happens. Okay, this will be another opportunity. Depending on how market's going to react at that zone, and of course, the target here is halfway off this entire move, right, which is back to somewhere around like 138. Okay, so definitely you want to have this in your watch list. Okay, dollar yen. Okay, crude oil, shorter term, gold and dollar yen slightly on the longer term perspective. Okay. Another one here I'll talk about before I open up quick Q&A is the U.S. equities market. I'll just search the index here. Okay. U.S. equity. Okay, this one, U.S. 500. Okay. Now, of course, if you're looking at equities market, okay, you need to factor in a little bit on the macro environment as well, because interest rate decisions would have also some impact in the equities. Global events like if the war between Hamas and Israel continue to escalate, is going to have an impact in this as well. But if you're just purely looking from a technical point of view, a pattern is setting up over here, right? So very quickly, if I bring this in, okay, what we're seeing here is a simple tree wave, which is a pattern that kind of talk about today as well. Okay, that would give us a nice little WXY, right? Basically, and so like direction, right? Direction here, we're setting up the focus on being a buy trade. Of course, if we wait for this to come down, we'll look for the buy because this is impulsive. This was a reversal. Okay, sorry, I draw a little bit too much. Let me erase those. Okay, so direction wise, we're up, right? We're focusing on the buy, but timing not yet, right? Because timing over here, what I want to wait out for, okay, is for price to actually come down a little bit more around the zone. That will be a buy, right? So timing, patient, direction, upside, context, right? So why are we looking to buy? Is it worthwhile and things like that? The answer is yes, because if today again you look at where the market came from, okay, the market came from the top, okay, and of course we have the bigger 1, 2, 3. Okay, we have the bigger 1, 2, 3. Nice little pattern here, that first reaction. So if this were to take off, there's a good chance it will, eventually complete this and break it to the next top. Okay, so that's what we're looking out for, right? Huge potential upside opportunity. The context is price came from a low. Okay, so equities market, I think if you're looking at S&P 500 as well as NASDAQ, these two chart pretty much the same. Okay, if you look at NASDAQ, okay, forward time frame. Okay, look at the pattern, right? It's more or less the same, right? So S&P and NASDAQ, I think generally the direction is upside. Okay. Yeah, so this is some of the asset that I'm personally looking out for, at least from a larger perspective, right? Larger, longer term perspective. Okay. So yeah, very quickly, let me take a look at some of the questions that you guys may have. Okay. First one I see here from question is from Zihan. So Zihan asks, if the Israel-Palestine war got worse, where can we invest in? I think that's naturally going to be pivot into like gold, okay, or even crude oil, right? If the war really escalates, sometimes you see oil prices go up. I think the most direct one is definitely gold. Okay. Emily asks, 4-hour time frame trade means we need at least 1 or 2 days. Yeah, the duration is around there. Okay, so Noah asked about recording. I think yeah, you're gonna get that. Rocket Czar asks, can you look at pound Aussie H1 time frame? Okay. Okay, so for me, H1 here, one of the clearest pattern that's developing is naturally still this here. Let me just see from a larger perspective point of view. Okay. I think pound Aussie for me, H1 wise, the momentum is still down, but I would not focus too much on the sell, but I'll be more interested in the buy, right? Again, the context will kick in. Okay, context over here is, yes, we are looking at hourly, but you want to know what's happening on the larger scheme of things. There's a good possibility we are seeing this move here. This may be just a pullback and then another push up. Okay, so on the short term, on the H1, we may see a little bit more downside, but from a larger scheme of things, we may still be generally upside. Okay, so if you go down to the H1 and use a little bit of a fit guidance to see if it's still worth looking at the sell, at least for a short term, my answer is no. Okay, why? Again, we have all this context in play. The equal leg, right? So this area would probably see some reaction. So my take here is that instead of focusing on the sell side of things, I want to see, can I get a crawl? If I can get a crawl in this zone, then that will be a buy trade naturally, right? Three wave completed. Um, I have a setup to get involved in the buy. Three wave completed is part of the timing element. Direction wise, I'm building it from a context perspective. Okay. Now this zone here may have a little bit of a reaction naturally as well. Okay, not the perfect zone, but you can see how market can react around that. So overall, I think my take here is instead of focusing on the sell side, wait for a reversal pattern to confirm the probability is higher to the upside, and then right on the reversal. Okay. Is it a good time to enter since the overall wave shows bullish trend, right? Yeah, so I think I kind of did not see your part on that. But basically, yeah, that's what I'm trying to explain, right? Wait for the setup to come to you and then look for the buy. Okay, Emily asks, normally forex trading is intraday to avoid swap. Is it advisable to hold more than one day? Yeah, that's a very common misconception, right? To be honest, a lot of people think that, well, I don't want to hold overnight because I need to pay swap, or they have the fear that I want to see a result very fast, right? Usually the concern only comes if you're losing a trade. I mean, if today you're winning, right? You don't mind holding on to a winning trade. Okay. And if let's say every day you're starting to see more and more profits, like why would you cut it? Okay. So my take here is no, right? To me, my personal take here is not necessary, right? I mean, today if we hold a trade for like 3 days and the trade goes in our direction, like why would you cut a profitable trade just because you want to avoid swap? Swap is not, it's not expensive. Okay. I mean, today if you make $100, you pay $1. I mean, that's fine. I mean, not a very significant portion of things. And then if let's say the next day you can make $150 and then you pay an additional 50 cents, right? 150. I mean, I'm willing to do that, right? Why would I save 50 cents and cut my trade to 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 prevent myself from making the additional $50, right? So the whole idea here is shift your perspective a little bit, right? Just take away the concept of swap. Okay, because to be honest, if you are not making money, you should cut your trade anyway. You will pay a little bit of swap, yes, but it's not going to be significant. And then on the other side, if your trade is winning and you can potentially make more, why cut yourself short just because of that tiny bit of swap fee, right? So your trading decision on when to get in and when to get out shouldn't be because of swap, right? It's like, okay, I use this example, right? Imagine today you want to drive from one point to another point, especially in KL, right? You have many different ways to reach your destination. Okay, some roads require to pay toll, some roads doesn't require you to pay toll, right? So imagine toll is like swap. Okay, and if today going through a route that needs you to pay toll, let's say it's a 2 ringgit toll, it takes you 20 minutes. Okay. And if today you say, I don't want to pay toll, I choose another route. Maybe that route requires you to go like 40 minutes. Okay. So one is 20 minutes, you pay 2 ringgit. The other one is 40 minutes, you don't pay toll. But if you today you only think about the 2 ringgit of toll, it's not a complete picture, right? Because you need to think about, okay, what's the value of your time, right? One is 20 minutes, one is 40 minutes. What can you do in the additional 20 minutes that you save? The other one is you need to determine on the direct the distance, right? Because if today toll is shorter distance, you save on petrol as well. You save on your mileage, right? So think of it, put what I've described into trading as well, right? Today, if you only consider about swap to make your decision, then it's too small, right? You want to look at more perspective of things. Okay, so I hope that perspective give you a slightly different view onto that. Okay, TCY asks, can I know your opinion on dollar pound? Okay, usually we don't talk about dollar pound, we talk about pound dollar. Okay, so it's kind of opposite. Okay, yeah, my opinion on this is that this week here, unlikely we're gonna get anything. Okay, the course I think right now the development of price is not giving us a very clear sense as to where this would likely head towards, right? Just very simply, you can see we are basically in the middle. There's no clear pattern right now. But if let's say the market comes down here and forms a crawl, then we have a clear sense of direction that we can look out for. If let's say the market actually then decides to go back up here, okay, that would not be clear as well. So the thing that's gonna make it clear is that we either come down and form a crawl, then we have a clear sense of direction and context to work with, double top, double bottom cup pattern. Or this decides to actually do a break above, okay, and starts to form some kind of a consolidation at the top here, then that gives us a clearer sense of things, right? So right now it's more like in the middle of things and there's no clear pattern. Okay, so things like this I usually just avoid putting too much emphasis on it and give it time to develop first. Okay, until it gives me a sense of like, okay, clear direction, that I can work on, that I'll come back to it. But for now, I think pound dollar doesn't really give us that. Okay. Okay, we have one of you asking about Aussie market, right? Yeah. Aussie market seems to be quite similar to S&P, right? Which makes sense, right? Because generally, equities market tend to be quite in tandem, right? They move quite similarly. So do look out on the 50 and 618 zone, of course. Okay. So if we can get a little bit more of this development here, so ideally you want this to come down slow, right? Three wave, that's the timing. That's the price area to consider. Okay, the direction is quite clear, impulse correction upside, right? Of course, if you look at it from a larger time frame perspective, we have the context of upside as well, because where are we coming from? We're coming from a key level here. Okay, so definitely you want to focus on upside, right? I think that's more worthwhile to consider. Okay, so that's the direction on Aussie. Aussie 200, right? Not Aussie dollar, right? This is AXS, which is Aussie equities. Okay, follow-up question here is, on average, how long do we hold trades based on the 4-hour chart? It really depends, but on average, somewhere between like maybe 1 or 2 days. Sometimes it can extend a little bit to 3 days. Yeah, but for the last 2 weeks, the trades that I take average out is about 2 days, 2 to 3, right? That's generally that. Okay. Yeah. So hope that cleared the questions on it. Okay. So yeah, very quickly, let me go back to the mysterious gift session. Okay. To kind of end off today's session over here. If you have been paying attention throughout, you'll probably be able to answer these questions. Okay. Okay, good. Okay, so first question over here. Okay, what is the key macro direction that was discussed today? Okay, Okay, so what you need to do, right, is type in A, B, or C, and then the moderator today over here would help us to pick, right, the fastest and the correct answer will win. Okay, good. So the correct answer for this is actually de-dollarization, right? Which we kind of talk a little bit about the BRICS conglomerate, right? Formation of BRICS, and then the dollar would start to lose value overall. Okay. Now, of course, we did not cover rise of crypto. We did not cover fall of euro. But those are actually some concern as well that you may want to keep track on from a global macro perspective. Yeah, because there's a possibility that we'll see a fall in euro as a zone. And of course, crypto is still very speculative, but potentially we'll see a little bit more traction in the future. Okay, but today's focus, where we mentioned, is actually de-dollarization. Good. Okay, so congrats to YSYX and Victor CH. Do follow the instruction over there, fill in the Google form, okay, so that MQ Demi here will be able to prepare the gift for you. Okay, next question. Okay, which asset will be potentially hot trade or investment? Okay, I think this one quite clear if you've been paying attention. Okay. When I mean hot, means that something that you definitely want to pay attention to, definitely you want to have it in your watch list. Okay. So same thing here, just type in A, B, or C. Is it US dollar? Is it Bitcoin? Is it gold or silver? Okay, so the correct answer is actually C. Okay, we talk about global, we talk about de-dollarization. So yes, USD will still be one of the safer asset, but moving forward, gold will be actually a bit more interesting to keep watch compared to dollar. That's my opinion. Bitcoin is very speculative. It's not yet an investment. Okay, it's still a speculative asset. So the answer over this is naturally precious metal like gold and silver. Okay, so congrats to Yuk Long and Derfo. Okay, good. So same thing, fill up the Google form. Okay, and last question over here for today. If you pay attention very closely, I keep emphasizing this. Okay, is which of this is not part of the checklist that we mentioned today, right? I can't give you a framework, a triangle. Okay, so which is not part of that, right? A, direction, B, timing, C, price, D, macro. Okay, which is not part of it? Okay, I use the word price and context, right? So which is not part of it? Okay, so the correct answer is actually macro. Okay, now macro is important, don't get me wrong. Okay, but for the clarity of the framework, we have the three component, right? Direction, timing, and price or context. Okay, macro is more like another different framework to give us that confluence, right? To kind of see if there's alignment to it. But direction, timing, price, or context are basically the framework that I give you guys today. Do I do hope that gives you that clarity in moving forward as well. If you're using different strategy, at the end of the day, your strategy should fulfill this three component, right? It should tell you what direction to focus, when is the best time to enter, in terms of setup, and then in terms of price or context, it's like, is it worth it? Okay. So yes, congrats to Kyoki and Robert. Same thing here. Do fill up your Google form. Okay, yeah. So that's all from me for today. I hope the session actually gives you some clarity in approaching the market, as well as some key opportunities and events to look out for moving forward in Q4 and going into next year. Okay. Yeah, so I hope those gives you some ideas and insights to work on. Okay, so that's all for me. All the best to your trading. We'll end off today's session over here, and we'll see you guys in the future. Okay, bye bye.
Thanks for watching.